So good afternoon, everybody. Welcome in Institute of Cryptoanarchy at LibertyCon. And I'm glad to have here today for the second time Jor Bednar, who is working in IT security, and he is very active in the cryptocurrency space. And today he will talk about the Bitcoin, and he will try to persuade you that Bitcoin is a good store of value. So you're right, it's yours.
All right. Zapnem to? Či ty?
Jo, je to zapnuté.
Okay. So, I hope all of you save some money for retirement, and I hope that you don't trust any state-created social security systems for your retirement. And I would like to talk about one thing that is very interesting now, and that's the fact that people have been usually thinking about Bitcoin mostly as a payment system. We are talking about how to use it to pay for your e-shop orders, pay for coffee in Bitcoin cafe in Paralelni Polis, or use it as a means of transfer of value or as a transaction system. And then I found out that there are quite a lot of people, and I realized that I'm one of them, that actually uses Bitcoin as a store of value. So what that means is that if I have some extra money, I want to save it. I buy some gold, some Bitcoin, and some other assets. And I have found that no matter what, I always buy Bitcoin, let's say every month, or if I have the extra money, and I just store it somewhere and I save it for the future. So I started to think about what's if this is actually a good strategy or not, and I found out some pretty interesting things which I'll tell you about. So today the Bitcoin fell at least 20%. I don't know what's the what's the number right now, so I think this is the perfect time to talk about Bitcoin as a store of value, because people usually think that if something is this volatile, so this is the entire Bitstamp USD history, so it starts where Bitstamp started. Why would you put your savings into something that looks like this, which is not stable at all, and it's more or less crazy? And the first realization is that people often seek stability, but it's not the necessary condition for a store of value. And I will tell you something about why people save in Bitcoin instead of other options. So maybe gold, which is one of the libertarians' store of value of choice. And but the goal is of storing value is usually always the same. People store value because they want to enjoy what they produced at a later time. So they kind of try to transfer value in time. And we all know that cash loses value, so it's not anymore a good option to buy euros and stuff it in your pillow or something like that. Because we know that if we do this, then the cash will lose value, and that means we can't enjoy it later that much. I think gold is a very good option, and it should be in your portfolio if you are saving seriously. And I will start with a comparison of what I'm talking about. So these are the main fiat currencies: US dollar, euro. Before Eurozone, it's the price of Deutsche Mark, so I'm not saying that it started in 1950. So British pound, US dollar, euro, and grams of gold. And this is the crude oil prices, historical, over the last, let's say, 60 years. And as you can see, the price of crude oil in gold is more or less stable. There are some fluctuations, there's some volatility. But if you saved, let's say, a British pound in 1970, the price would be somewhere maybe like here. So you wouldn't be able to enjoy the same amount of crude oil if you just save the British pound. So the first thing to say, in order for something to be a good store of value, it should actually store the value and not be inflated like this. Of course, everyone says, okay, I can't save money in something that's so volatile as Bitcoin because I don't know what's going on and so on. And I think that the volatility can actually be a good thing. I will show you how to profit from volatility. I don't think that volatility is just something to avoid. I think if something is too stable, it shows some kind of risk, and there are ways of dealing with it. So here's a question to you. Let's say these are two assets. They're not cryptocurrencies. It's just fake data that I generated. And you have two assets. One of them, we'll call it green. The price is represented in the green line or the points. So the volatility is very low. It's pretty stable, goes up, and ends at one particular price. And the red one is a little bit more crazy. So my question to you is, this is today, both assets have the same price, and both assets have the same market size, so the market cap is the same. Which one would you buy right now? So who would buy the green one? Two, okay, green one. Who would buy the red one? Okay, and why? So why would you buy the green one?
Well, it seems that it had a similar return over the same period, but it was less. It seems that it had a similar return over that whole period, but the volatility was lower. So if I want to store value, there is lower risk in the green asset.
Okay. Why would you buy the red one?
I would say simply the probability that it will sell for more is worth it.
Okay, so you are the risky type. Does anyone see any information here that says that the red one might be better in some case? Okay, so
the red one seems to be, if its price differs from the green one, it's usually higher. So there might be potential to gain on that. And if it's under the green one, it's only short periods. So
okay.
I don't know. Maybe.
So let's say that these two were actually stock in some company. So let's say this is stock price. What can you tell me about the red company? It's a company. It's the stock price of company, and so what happened here with the company? It fell down. They went almost bankrupt. And then what happened? Somehow they saved it. They managed to turn almost bankrupt company. It's not below zero because it still has some assets, but they turned it around. They found a way to gain trust of the people again, and the price went up. Then something else happened. They went almost bankrupt, and they went out. So my question is, what happens if the green one bankrupts or goes almost bankrupt? We don't know because it never happened. So if this was the US dollar, we don't know what would happen if it goes almost bankrupt. We have never seen this. So I think that the information that's encoded in the red graph is the fact that it can sustain trouble. If it falls down, it comes back because someone trusts it, there are enough people who think it's a good idea. And with the green one, we simply don't know. So I think this is much more important information than the volatility. Of course, you need to deal with the volatility later. But given that they have the same track record, same price, and same market capitalization, I would always buy the red one because it has shown it can withstand trouble. It's more robust. Okay, so why do people buy bitcoins to store value? There are many reasons. A lot of them participate in the black or gray economy, so they have some kind of income that they want to hide, and stuffing pillows with cash was the way to do it in the last century, and in this century it's no longer a good idea because the cash loses so much value that it's not actually saving. So there are some people, let's not judge if they're good, bad, or what they're selling or what they're doing, but their income comes from the black or gray markets, and they want to save the income and not be seen by the state. So it's a generalized way of saying these are the people for whom the privacy matters. With privacy, there's one other issue, which is called OECD CRS. Has anyone heard about this? It has several other names. So, okay, have you heard about FATCA, which is an American reporting standard? So FATCA is basically a way for American IRS to receive information about how much money you have on your account and what kind of accounts you have around the world. And OECD got inspired by this horrible law, and they created this common reporting standard, which says that the countries who have signed this agreement exchange your private information. So, for example, if I'm a Slovak tax resident and I have a bank account, let's say, in Czech Republic, the Czech bank has to send my bank account balance, all the dividends that I've earned and all the capital gains that I had to the Slovak government, who then knows that I have a bank account there. So if you try to solve this problem of storing value in the past by opening an offshore bank account, that's no longer a good idea, because all of those 100 countries report all your bank account balances back to your own state. So I think this can be one of the reasons for the Bitcoin spike near the end of the year, because the end of the year 2016 was the first time that these banks exchange information. So it's just my theory. It might be something nice in China or whatever else. It's also hard to confiscate, which also includes gold. So there have been cases of governments confiscating physical gold, and you had to give it back. It is very hard to confiscate Bitcoin unless you tell the people basically your brain wallet or your passphrase to your wallet. There are a lot of people who like the idea that there is no central banks. We all see the effects of money production, and they are huge. So there are a lot of things that are happening around us that would not happen because they're not profitable projects, but people are still doing them because they get to the newly produced money first. So why is this important is the fact that we usually think of the money production only as a slow inflation. Let's say the inflation is 3%, and we all perceive that all that's happening is that the prices in shops are going up by 3% every year. But that's not what's actually happening. The price of laptops is going down 50%. Every year, if you buy a laptop, you know that it will be cheaper the next year. So we have a huge deflation in the price of laptops. Real estate goes up much faster. And these effects mean that the newly created money are not distributed evenly. So unless a government employee knocked on your door and gave you, I don't know, 3,000 euros or, I don't know, 50,000 Czech crowns, you know that it's not evenly distributed. It's distributed through banks, through mortgages, through things that the banks finance, through government funds and so on, and it changes the prices. So a lot of people don't like this effect because it is problematic for them, so they prefer to save in Bitcoin. It is very easily transportable across borders, so I always laugh when I see those signs, declare cash or any valuables that are over 10,000 US dollars if you cross the border. So I say, oh, okay, you will probably not be able to read my brain and get my Bitcoin brain wallet, and I transport value across borders all the time because I already have it in my brain. And there are a lot of people who just basically trust in crypto technologies and would like to participate in future black market because in some reasons it can be cheaper. And there's a special group of people who would pay premium just if they would be able to be out of the state financial system. So there are people who would rather pay more than they would have paid in taxes just not to finance the state. So if someone thinks that, financing, let's say, war in Iraq or bombing in Syria or something, if I think that this is not a good idea, then there is some kind of moral incentive for people to avoid being taxed just because they don't want to finance these things. So people would actually pay more in order not to pay taxes, which would be less. And I have met a few people like this, and they really exist. So all these reasons are, I think, really good reasons for people to store value in Bitcoin. And as we have network effects, that makes it even a better store of value for Bitcoin. So if you wanted to avoid privacy issues, turning into electronic gold is not an option because that's a transaction that's monitored, and of course having it physically is also a risk because of confiscation. So Bitcoin has some unique properties that gold doesn't have in this regard, and traveling with it is much easier. So there are some obstacles. First, that is commonly mentioned, is a regulatory threat. So what if government bans Bitcoin or Bitcoin exchanges? I think it's actually really good news because it means discounted access to the black market. If you wanted to participate in the black market transactions, you would actually already have the Bitcoin, so the transactions would be cheaper for you. So black market is huge. It is happening all the time. Even if you don't know it, you go to a restaurant and they don't upload the transaction to the government, and it suddenly becomes black market transaction even if you don't know about it. So I'm not only speaking about the drug markets or these things. Black market transactions are day to day. You go to flea market and you trade with people, that's all black market. And if you already have the currency that is used, then that means that the products and services are cheaper. Volatility is another obstacle which I'll talk about, and the other problem is that we can say that value can drop to near zero. Let's say Bitcoin hard fork happens and people will all move to Monero or to something else, and we don't know what will actually happen. So this is a problem with everything, and there are ways around this. That's one important thing, and the other important thing is that Bitcoin has shown that it has fallen down several times and came back. So it's very difficult to predict the future, but we have seen some very positive news. And then there's liquidity. If you trust that you will be able to exchange the underlying store of value for something that you actually want. Okay, I think that there will be nothing stable in this world over your and my lifetime. I think that if it is as stable as the green line, it might contain hidden risk. So usually if you see something that's straight and with very low volatility going slowly up, that means someone is trying to push it into a very nice straight line. So an example would be Czech crown currently, which is pegged to the euro, and it's held in a very, very narrow range of values. And when there's a time when they can no longer do it, it can probably crash. And so my first recommendation is don't make stability your number one priority. I think there will be nothing stable in this world in the long term. And the other thing is something that's called Lindy Effect. I don't know if someone knows what that means. Lindy Effect. Okay, perfect. So you'll learn something. So Lindy Effect is the effect about non-perishable things, let's say a chair, that says that the life expectancy of that object is proportional to its age. So if I'm 60 years old, I'm not probably going to live another 60 years, at least on average. I will, but but if you take something non-perishable such as a chair, it has been here for at least 2,000 years in some form, and we can expect that chairs in some form will be here in the next 2,000 years. If you take an iPhone 7, which has been out for a few months, probably no one will buy an iPhone 7 in 3 years because it will be an out-of-date bullshit technology. So with things that are non-perishable storage of value, we should always also look at the age of the technology or of the system. So that's why I like gold, because it has been here for hundreds or thousands of years, and it was used as a store of value. So I think this will continue because we don't expect it to die just tomorrow for some reason. And that's the same case with Bitcoin. Bitcoin is the oldest cryptocurrency. So, you know, if there's something like Shadow Coin, which probably crashed 40% today, just because they announced that they will make it into something different and there will be another coin. It's something very young. It's we didn't see the crashing and people trusting it and going up again. So that means that I expect things like Monero to live proportionally to its age. So if it's 3 years old, I expect it to be here another 3 years, but probably not longer. So that's called Lindy Effect. It's very interesting to think about technology in these terms. All right, so how to live with price volatility? So I was talking with a friend, and we were talking about this question: can a company survive while using Bitcoin as an accounting standard? So we would be only receiving Bitcoin and paying suppliers in Bitcoin. What could you do to survive in this situation? You cannot use any other currency. What's the strategy? How would you survive with such a thing that can go up and down 20% in a few days, let's say? So what is the risk here? The risk is a customer pays me for my service, I need to pay my suppliers, and before I do that, the price goes down. If this happens, I'm screwed because I got 1 Bitcoin and I owe my suppliers 3 Bitcoin and I go bankrupt. So what you can do is you can actually shorten the accounting intervals to as small interval as possible. So that means paying your employees every day or twice a day with the current price. Paying your suppliers right when you receive the money. So make a smart contract that says, okay, if someone buys coffee at my store, I immediately order for that spot price new coffee, I pay the barista, and I contribute to some kind of fund for repairs of the coffee machine. So extremely shortening the accounting intervals means that the risk of volatility will go away, or it will be contained in a very, very short time interval. But the question is not only about volatility. There's one more question: can we profit from it? So, of course, and one strategy is making sure that we buy for low prices. So let's say you have I'll use the example of the cafeteria. So you have a cafeteria, everything is nice, everything is doing fine, but you know that at some point you should buy new tables and chairs and maybe a new sound system in the cafeteria. Doesn't have to be tomorrow, it can be at some point, and you're saving from the profits. So you take part of the profit and you save that part as a let's say a capital expense fund. So you're saving money, and at some point when you have enough money and it's the right time, you buy the chairs, the sound system, and everything else. So the money to the capital fund goes from profits, extremely short time intervals, so you get different prices. So each contribution to this capital fund would be at a different Bitcoin price. You just remember the prices you bought Bitcoin for, or what was the value of Bitcoin, and you make a simple rule: I will only spend this capital fund when the current price is 20% higher than the average price of Bitcoin that I used. Which means that at this point, your capital expenses are 20% less than your competition. The only thing that you didn't need to predict anything, so it's not gambling. You didn't need to count on anything else than the volatility and the fact that you don't have to do this capital expense at a particular time. So it's much difficult to plan. So you know you need those tables this year, but you don't know when exactly. So you're saving. If the price goes down, perfect, because you're saving more. And when the price goes up 20% or more, then you make the capital expense. So this is how I actually paid my taxes 2 days ago. I used a very cheap. I used Bitcoin that I got for a lot less than was the price when I sold them, when I had to pay the taxes. And there are some more people in the room that have used this strategy. So In short, in a company, you can shorten intervals to combat volatility, and you can monitor the price of Bitcoin, always buy every day, and make capital expenditures or buy things from this capital fund when the price is 20% more than your cost for the Bitcoin. So I was thinking about applying this to my personal life. So of course I can buy a vacation when it's 20% cheaper for me. I can delay some things that I want to buy. So if I wanted to buy a car, I will wait for the volatility to kick in and buy it when the price is high. The thing is, I'm not speculating about anything. So the strategy for personal finance is buy regularly. The thing that works best is if you're buying every day for a small amount. So let's say you buy Bitcoin for 10 euros every day. Not talking about transaction costs now, but you can do that. It also works if you do it once a month. And the thing with consistent buying strategy means you don't speculate. You buy when it's expensive. You buy when it's cheap, and you get an average price. So you don't care about the volatility. You just care about the average price. You don't care about volatility. And then you say, okay, I'm gonna buy this vacation, or I'm going to spend money when the price is up, and you do it. Of course, you don't need to buy anything. You can exchange Bitcoin to Euro or to Czech crowns based on the current exchange rate. So you can then switch from Bitcoin as a storage of value to your local fiat currency and spend it 2 days later or something like that. And you can also enjoy it during this time. So this is a simulation of both just buying Bitcoin strategy and buying Bitcoin at the same intervals, but selling it when it's 20% higher than my price when I bought it. So this is not this graph is a little bit confusing, but what I wanted to show is that, of course, what matters is when you start. Because if you started 1 year ago when the Bitcoin was $1,000 and you ended now when Bitcoin is $1,000, you wouldn't have gained anything. So I thought, okay, there might be some good days to start and some bad days to start. And so each point here is the whole strategy that started on 1 day and ended 2 years later. So this means that there are, so the blue line means I'm only buying Bitcoin and not doing anything with it. So there were some bad days when you would have lost money. So this is the cost for buying, that's fixed. I'm using the same amount, but in some days, I would usually earn a lot of money. So if I started on this day, it would be 8,000 and not 24,000 euros. And if I have done it now, it would be slightly less. So there are days when it's not a good store of value. And the red strategy is what I just told you, so buying Bitcoin every month and selling it when the price is 20% higher. So the green line are the dividends from this conversion, which you can use immediately. You don't need to save it anymore. You can, but you don't have it. So you can use all this money. And the red line is combination of the dividends and the Bitcoin price that you will be left with. So what is nice about it is if the Bitcoin goes down or the volatility is not high enough, if the Bitcoin price goes down or the volatility is high, this strategy that I described you works better. If the Bitcoin is going just up, then the blue one is better. So what I wanted you to explain here is that you don't only need to use Bitcoin as a store of value just buying Bitcoin, or on the other hand, you don't need to gamble. You don't need to predict the markets and think, okay, now it will go up, now it will go down, and try to gamble the system. Basically, this is a consistent strategy. You don't need to foresee anything. You can just do it every day, and it has pretty good results when you look at the history. If I have run this strategy for 3 years, not 2 years, there is no losing strategy. There are no bad days to start. So even if you picked the worst prices of Bitcoin, you would always make money if you ran this strategy for 3 years. I haven't found a way to lose money using this strategy on the historical Bitcoin data if your time horizon is at least 3 years. But that might change, of course. So combating volatility, we are making use of volatility. This strategy makes money when Bitcoin is volatile. So don't worry about volatility so much. The question is, will people trust Bitcoin in 10 years or in 20 years? Is it a good idea to store it? I said some reasons why I think there are people who would prefer to store in Bitcoin and not in gold or something else. Of course, what is really nice about this strategy is that it pays you the investment back over time. So if you are worrying that the Bitcoin will fall to zero, you will always keep this green line. And if you do it for at least 3 years, this green line will almost never be below the original investment. So that's also a nice way of doing it, protecting yourself against the fall to zero, which of course I would just gamble some money and buy something if Bitcoin was 20 cents, but that's just me. Okay, so I think that price volatility is not a showstopper. You can even profit from it without betting and without predicting anything else than volatility. So for people who say, I can't save in Bitcoin because it is too volatile, tell them, okay, there's a strategy that makes use of it. So if you think it's too volatile, then just use this as a bet. And these unique properties of Bitcoin make it a choice for store of value for many people. So, of course, I wouldn't recommend you, as Martin said in the beginning, I wouldn't tell you just, invest everything in Bitcoin and use it as the only store of value. I think that would be definitely a bad idea. But we should ask questions, is this commodity or currency a good store of value? And kind of detach it from things about stability and volatility. What I also wanted to show you is that even a very long-term stability, even 50 years, doesn't mean that tomorrow the price won't be zero. So if you're betting on euro because you hope that its history is a good predictor of the future, that might not happen. And for this reason, if you have seen some currency or commodity that made it back from the very bottom, it's probably a much better choice than just trusting a nice green line that is doing something. For the euro, it would go down, not up, but that's just something. So that was my talk, and I'm happy to answer some questions.
So thank you for interesting view on the Bitcoin as a store of value and questions.
Hi, thank you. The strategy that you just described with the regular buying and then selling, do you have any tips on how to automate this? That you don't have to do it manually every day, but just, I don't know. Is there a service, for example, for that, or you need to make your own script or something?
I will make a script for it. Right now I use automation that is basically convincing my mom and my colleagues that we need to do it every month, so someone goes to the ATM and buys it every month. And with selling, I see that I need some money to spend and I spend it. So that's why I paid taxes, because I calculated in my head, okay, this is a good deal. I just pay the taxes when the price is much higher than when I bought it. I know people who are doing this in their companies, and it's also that they're earning money in Bitcoin and are basically using this strategy to buy stuff when they have enough money and when the price is high. So it's basically in the head of the manager. So the second strategy, when you would automate it, I don't have any script for it right now because I don't use exchanges. I don't send SEPA payments and so on. So that, for me, that's a privacy problem. So I do it manually right now. Also, one interesting thing about Bitcoin as a storage of value. There are a lot of people that are just buying Bitcoin and storing it on their Trezor or in their wallet. And there is a very small group of people that are actually trading on exchanges. So that means that the current value of Bitcoin is, of course, determined by the exchanges mainly. So if you just buy something on Open Bazaar, it won't change the price of the Bitcoin. But the real trading between fiat and Bitcoin sets the price. But for us who are saving, we don't care about the price. We are not on the exchanges. We don't affect the price at all. We're basically just saving. So if you are buying Bitcoin every month and it doesn't matter what's the cost, so for the same amount of money, the current price of Bitcoin is just a fiction for you. It doesn't really matter, because if your goal is that I want to have, let's say, 500 Bitcoins in 10 years, I don't care about, I know, okay, have I achieved my goal or I have not achieved my goal. I don't even think about the exchange rate. So people focus so much on, seeing the graphs and daily price fluctuations and so on. But if you really just save in Bitcoin and you don't use this strategy, then it shouldn't matter so much. So ordinarily I look at the price of Bitcoin maybe once a month just for fun, or if it's a lunchtime conversation, but I don't try to focus too much on the current market price, because it's very far from what I'm actually doing with Bitcoin. So any other? Yeah, that's one.
When you say in the last slide that you suggest to differentiate in order to not to put all the eggs in the same box, do you mean that also in relationship with the so-called altcoins, like the one you mentioned before, or you think that you should differentiate between one digital gold like Bitcoin and other kind of asset? Because my take on that would be that basically the main risks of failure for Bitcoin are also with very few exceptions, risks of failure for every other clone of Bitcoin.
Yeah. So I don't use altcoins for saving. I sometimes use it for gambling, but it's not something that I pay too much attention to. So I bought some Monero a while back, but it's just playing with these technologies basically because I like to learn how they work and what's the technical differences. With cryptocurrencies, I don't save in any other cryptocurrency because I think the Lindy Effect is the most important thing. So it doesn't matter that Monero has this nice, cool anonymization feature. It's still just a transaction system, and I'll tell you why. So the main selling point of Bitcoin is that it's anonymous, and that you can use it on some dark markets. So let's say I wanted to buy some wheat on a dark market, and I would have to use Monero. What would I do is I would use Shapeshift to sell my Bitcoin, turn it into Monero, pay the seller, and when the seller gets the money, I think that in 90% of cases, the first thing they would do is turn it back to Bitcoin. So that means that Monero is not a store of value, it's a transaction system, because all you use it for is to facilitate the transaction. It has some value because of this, but I don't think it's a good store of value, because if tomorrow there's another cool anonymous cryptocurrency, I would just use that one. Whatever is cheaper, I don't care. If the transaction is confirmed faster, you know, it's 2 clicks and not 4 clicks or anything else, I would just use another transaction system. So I personally think that the age of the cryptocurrency is more important than some cool technical feature which makes it a better transaction system. So with saving in anything, I think you should first think about your goals. So when I started saving money, I set my goals in grams of gold or ounces of gold. That's how I see my portfolio and my savings. So that's how I determine what is actually the baseline of value for me. So I don't care if euro goes up or down, or US dollar, or even Bitcoin. I know that have I reached my goal or no, I need to save this much. So why I'm saying this is I think it's different for everyone. Some people can save in euros and it's perfectly fine for them. They maybe expect to live only 3 years or something like that. You can save in silver, you can buy art. If you understand art, it's a really good way to store value. So I think the answer would be different for everyone. So I would not say, okay, buy 60% gold, 30% Bitcoin or anything like that. It really depends on people. Some people don't care about privacy concerns. They can buy stock or whatever. So for me, what I wanted to show you that you should at least think about using Bitcoin as a saving system. It might not, you might be getting heart attacks from just looking at the volatility, and then it's probably not good for you. So it depends. I know I personally don't know anyone who would be saving in altcoins. So they're usually gambling and trying to sell it in the next 1 or 3 years. I haven't met a person who would buy Litecoins to spend it when they retire 20 years later. I have not met that person. Maybe there are some, but not for me, definitely.
Okay, one more question.
Hi, I would like to ask you, what's your opinion on Bitcoin Unlimited, like the new version, which would cause the fork, hard fork, and how damaging the fork could be? Maybe which version will be like more successful?
Yeah, unfortunately I don't have a crystal ball, so I have no idea what will happen. And I think we will just see. I think that what I think this whole debate is very interesting in is that we see that the decision making in Bitcoin is highly decentralized. So in Ethereum, there's Vitalik who would say, okay, we are going for the hard fork, and this is how it is, and you can all think what you want. With Bitcoin, it's not so easy. There's no person that would say, okay, this is how we'll increase the block size, or this is what we'll do to increase throughput, which is a good thing. I think that this is a really shows that it's not as easy to manipulate the Bitcoin. But what will happen if there will be a fork, which one will be more valuable, or which one will have higher market cap, I have no idea. We'll see. A lot of fun.
Okay, thank you for the last question. Thank you, Ray, for your lecture. Thank you all for coming. This was actually the last talk in this room, in the room of Institute of Cryptoanarchy. But if you liked our topics, or if you liked our lectures, go to our Facebook, to Facebook Paralelni Polis, and check the event of Hackers Congress Paralelni Polis in this October. We will have a 3-day conference about financial and economic freedom in connection with decentralized technologies, cryptocurrencies, and so on. So you are all welcome. Thank you.